A listing appeared online offering a well-priced home, then turned into a scam that collected deposits for properties that didn't exist or weren't available. The photos looked real, the description matched the market, and the communication felt professional. Interested renters were told there was high demand and that quick action was needed to secure the property. Viewings were often unavailable due to travel, renovations, or remote ownership explanations. Applications were accepted quickly, sometimes within hours, with minimal verification. Then came the request for a deposit or bond to lock in the lease. Some paid thousands up front, believing they had secured a legitimate home. By the time they arrived or followed up, the listing had disappeared and the property was never theirs to rent. During the late 2010s and early 2020s, rental scams expanded alongside rising housing demand across Australia, the United States, the United Kingdom, and parts of Europe. These scams were often operated by organized groups using online platforms like Craigslist, Facebook Marketplace, and property listing sites. The properties advertised were usually real homes, copied from legitimate listings or previously rented properties. Scammers reused photos, descriptions, and even agent details to create convincing rental offers. Targets included students, migrants, and individuals urgently looking for accommodation in competitive markets. In many cities, victims were searching under time pressure, making quick decisions more likely. Reports from agencies, including the OAC and OAIC, showed thousands of complaints linked to rental scams. Financial losses ranged from a few $100s in application fees to several thousand in deposits and advance rent. By the time renters engaged with the listing, the setup already mirrored a legitimate rental process closely enough to avoid suspicion. The interaction usually began with an inquiry message, followed by a quick and professional response from the supposed landlord or agent. They provided additional details, rental terms, and sometimes even application forms that appeared structured and legitimate. Communication was often moved off-platform to email or messaging apps, reducing oversight from the original listing site. Reasons were given to explain limited availability, such as being overseas, managing the property remotely, or handling multiple applicants. This created a sense of urgency, while also justifying why in-person inspections were not possible. In some cases, virtual tours or additional photos were shared to reinforce credibility. Applications were approved quickly, often without the usual checks or references required in real rental processes. The next step was introduced as securing the property through a deposit or bond payment. By this stage, the renter believed they were dealing with a legitimate owner and progressing through a normal leasing process. Once the application was accepted, the scam moved into the payment stage, where renters were asked to transfer a deposit or advance rent. The request was framed as standard practice to secure the property due to high demand. Payment methods included bank transfers, international remittance services, or sometimes cryptocurrency. In many cases, official-looking receipts or lease agreements were provided after payment to reinforce legitimacy. Renters believed they had secured the property and began making arrangements to move in. Some were given keys by courier instructions or told access would be granted upon arrival.
Behind the scenes, the property was either already occupied, not for rent, or entirely unrelated to the scammer. Investigations later showed that the same property could be listed multiple times across different platforms simultaneously. By the end of this stage, funds had already been transferred with no real tenancy in place. As the process continued, some renters were asked to make additional payments, often described as insurance, utility setup, or key delivery fees. These requests were positioned as final steps before moving in, making them appear routine within the leasing process. Communication remained consistent, with detailed explanations and quick responses to maintain trust. If renters questioned delays, reasons were provided, such as administrative processing or third-party handling. In some cases, multiple applicants were mentioned to reinforce urgency and justify immediate payment. Losses increased when renters made repeated transfers, each one appearing to bring them closer to securing the property. Reports showed that victims sometimes paid deposits, advance rent, and additional fees over several days. Behind the scenes, funds were quickly moved across accounts, often crossing borders within hours. By this stage, the renter believed everything was progressing normally, even though the property was never legitimately available. The moment of realization usually came when renters attempted to access the property or confirm move-in details and received no response. Some arrived at the address only to find the property occupied by someone else or not listed for rent at all. Others contacted the real agent or owner and discovered the listing had been copied without permission. Communication from the scammer stopped or became inconsistent once payments were completed. Renters then reviewed earlier messages and began noticing small inconsistencies in details and instructions. Authorities across multiple countries, including the OAIC and the FTC, have issued warnings about these patterns. By the time the situation was confirmed, funds had already been transferred and were difficult to recover. In many cases, victims reported the incident after losing both money and the opportunity to secure legitimate housing. What initially appeared to be a successful rental quickly unraveled into a system designed to collect deposits without offering any property. The scam was typically uncovered when victims reported the incident to banks, housing platforms, or consumer protection agencies after failing to access the property. Across countries, reports showed the same pattern: copied listings, remote landlords, and upfront payment requests before any verified access. Agencies like the OAIC, the ACCS, and FDC identified these as coordinated rental fraud operations. Investigations revealed how scammers scraped real listings, reused photos, and rotated contact details to avoid detection. Digital analysis showed listings appearing simultaneously across multiple platforms with slight variations. Financial tracking indicated that deposits were routed through layered accounts and quickly moved internationally. In some cases, platforms removed listings after complaints, but similar ones reappeared under new identities. Banks and agencies issued alerts advising renters to verify ownership and avoid upfront payments without inspection. What appeared to be isolated listings was ultimately identified as a repeatable system designed to convert housing demand into financial loss. What made this scam effective was the combination of urgency, limited availability, and realistic property listings. Renters were not acting unusually. They were following what appeared to be a standard leasing process in a competitive market. The system created pressure early, reduced verification opportunities, and introduced payments as routine steps. Because the property looked real, the risk was not immediately visible. Investigations showed that the same structure was reused globally, with only listings and identities changing. This allowed the scam to scale across cities and countries while remaining convincing to new victims. The financial impact was often immediate, with deposits and advance rent lost in a single transaction. For many renters, the loss also meant restarting the housing search under increased pressure. The pattern remains active today, evolving with new platforms, but relying on the same core mechanism of turning demand for housing into financial loss.